Good afternoon, everybody. Welcome to the Aftermarket Monday. This is Dennis Wilborn, the founder of Active Trend Trading. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performances does not guarantee future performance. So aftermarket money, what we're trying to do in this time frame is, one, we're trying to just basically show some stocks where you can potentially take some timely actionable intel at the beginning of the week. Now, of course, premium members will get the email and text alerts when I'm getting into a particular trade. But also, I love to get the emails back from a lot of the members who are saying, hey, I'm trading the signals, I'm trading, on my own, and I'm doing real. I got one email today from a gentleman who basically said that he's just stuck with the 3 of the ETFs that we provided last year, and that he has just been trading LABU and I think gold, and just kind of hanging out with those entities, and he's jumped his the capital that he's trading strategy 1 with up a little bit over 30% for the year 2018. So it's always nice to get emails like that. We'll do a real quick market review, stocks and ETFs setting up. Here's some of the 2018 active trend trading refinements that we've made for members of all levels. One composite watch list that'll be going out tonight, along with the art and science of active trend trading, and then some of our enhanced portfolio building, simplified training opportunities is also what we're providing. Remember, have patience, stand back, and respect the rhythm in the market. That is so challenging to do sometimes for us. So, incorporate all of the 3 strategies that we are trading. We're up about 4.29% as of about 12 o'clock today. As you can see, NASDAQ has been going great guns, just going, really hitting the wall, up about 7% on both NASDAQ Composite. Russell's up about 4.3%. S&P up 5.65%. Up until this point, we really haven't even had, except one day, a little hint that, hey, we're going to roll over and get some pullback. Would it be good for the market to roll over and get some pullback? In other words, get rid of some of the excess momentum that's in the market? Sure. But I'm sitting there, I was pondering over this weekend why, this is extraordinary for a market to be responding the way it is. And I got to thinking that possibly there's a couple of reasons for that. And maybe this is not a topping type action, but in reality, what happens if, as we know, over the last, prior 8 years, prior presidencies, that while the recovery did happen, it was one of a recovery at the slowest rate of any recovery in history. At least that's what the economists have said. Could it be that the more positive business outlook, the getting rid of some of the governmental, policies and all that kind of stuff that were basically, putting chains on the productivity of the American worker and also American companies, with those removed, we're seeing a big surge in what should have been included in the previous 8 years, but there was too much inertia on top of businesses. So I'm just playing with that idea. I don't know. We'll see what we'll see where the markets go. But that's just a thought. So let's run through the rest of this. I want to remind you, and I think it looks like everybody online, if you're not an active trend trader member, either premium or just a free newsletter member, you want to take advantage of these 10 to 12 active trend trading bonus trades that we'll do on a yearly basis. And you can sign up for that right here at this website right here. And that will get you in the system. One of the things I want to highlight today, just real quick, is this concept of S&P seasonality. So here we are over in this area, January. Now, January, I want to follow this little pink line. That's basically an average year. And as you can see, it tends to get up a little bit of a tick up at the beginning of the year, and then a little bit of a pullback in February. Well, if we switch over to a year-to-date kind of, okay, this is 2017. Let me get my drawing utensils up here. Okay, up to this line right there, and starting over on this side of the chart, this was 2017. Since 2018 began, look at it, has just skyrocketed, and it's gone from, what's this, 27, a little bit under 2,700, let's say 2,683, all the way to today it closed, or when I took this camera shot, it was up at about 2,825. That's, yeah, Joe, you're absolutely right. The massive amount of money coming out of bonds and looking for somewhere to go. And also with the now that the companies can start repatriating their funds. Apparently, Apple's bringing back a lot of money from overseas to start building factories and all that kind of stuff. So that's kind of cool beans. So back on what we were doing, okay, we've got a real acceleration here that is at a higher rate than what we were seeing. But again, is this due to just continuing more good news for businesses? Unemployment's at its lowest rate, like it seems like forever. Very interesting. So I'm not an economist, but I'm watching this chart, and so I was thinking, is this a exhaustion move or a topping move? At this time, I'm not sure. We can't tell. Of course, we're not going to be able to tell until after it actually tops. But for the time being, again, play the pullbacks into the moving averages and wait for it. And you can go to an hourly chart. This is a daily chart. Go to the hourly chart and see what that's doing. But I just want to give you an idea, just a picture of this is what 2017 looked like, and we've got an acceleration. It does not look like just this little pink line just barely getting up about 1%. It's already gone up, 4% from what we saw earlier. Do a similar type of sneak peek over here on the NASDAQ. NASDAQ tends to just kind of run sideways for the first couple of months within a 2% range, and then it catches a bid around the March-April time from the way it goes. Well, what has it done this, so far this year? Well, again, that's over here where we basically picked up a bid here about the 64.83 level, and is now pushing up above the 680, almost 6,900 level. A really accelerated move, and so very unusual and out of character for the, if this is the tendency of the NASDAQ during the first 2 to 3 months of the year, it's operating outside the tendency of what it tends to do. And I mean, clearly it can do that. As we see last year, it also did basically it was just up on not on quite a straight line heading up, but it was very, very positive. I mean, this index has gone from where were we at last year about this time? It dropped down to about 5,000, and now we're up, to almost 6,800. That's a heck of a move in 1 year. So I just wanted to be aware of that, and it would seem. Okay, let's take a look at some charts here. It would seem that that a pullback is due, a little bit more significant than just a 2 or 3% pullback. But in reality, the pullbacks over the last several years have been quite short and shallow. Here's an entity on the what we're looking at with the strategy 1, strategy 2. This is the go no go table. I will be updating this again tonight and posting that for premium members on the radar section. A couple of highlighted things that we have basically changed and improved is, along with the ETFs and or indexes that are being followed, I've indicated here are the leveraged ETF that we would actually be trading. On the left is a bullish, on the right is the bearish entity. We replaced Nugget and Dust with JNUG and JDust, and that was because one of our members basically identified that JNUG and JDust goes up about a third more than the Dust and Nugget variety. So where Nugget, if Nugget went up 20%, JNUG was pushing 30% on its rebound. So we want to basically keep our eye on that. And then personally, our core stocks for at least the beginning of the year: Tesla, Baba, NVDA, Netflix, and YY. And we've got Tesla and Baba for the strategy 3 positions. Okay, I'm going to get that up. And we'll come back and run through some of those on the charts shortly. Okay, here's what we're looking at, 26. Okay, seasonal expectations. Is a pullback coming? One would think, yeah, are we at a climax top? I don't think we're at a climax top, but it would be really nice to get a good pullback into a solid level of support and resistance. Bonus trade, waiting for a setup there. Strategies 1, 2, and 3. There's what I'm waiting on, the 7 ETFs plus the core stocks. Catfish specials, none right now. Always remember the active trend trading system. We basically follow up 4 entry rules, which we are covering on our Wednesday night, and exit rules, and applying them to each one of the 3 strategies that we follow. And then at the beginning of the year, I started this trade. This is a lesson in compounding, and we'll be following this through the year. Last year in my personal account on this one, I got whacked a couple of times, and so I'm back down to actually less than $5,000. So my compounding, it doesn't work so good when it goes backwards, but I'll be posting an update on that on the this weekend. So remember it. I really believe what Jesse Livermore says. I absolutely believe that price movement patterns repeat. And that's because they repeat, that's where we can follow it. And so let's take a look at a couple of entities. Okay. First, I want to get in here with SPY. Let's see what SPY is doing. Again, this is a weekly chart, and a daily chart on the left, weekly chart on the right. And as you can see, it just continued to power higher today. Power higher today. It is further away from its moving averages. And the last couple of times when it pushed away from the moving average, when it finally reached the top for a while, it did one of these sideways or just a slight pullback into the 8-day moving average before rebounding. So until we get a signal like that, SPYs are kind of off limits. On the strategy 3 position on the spider that we opened last week, closed it today for, it hit the limits, the stop limit. So we closed that. But even though we weren't able to sell any premium, weren't able to get clear any of the sold premium against it, that part of the trade on strategy 2 is up to almost 10% for the spider since the beginning of the year. So that's excellent. Again, it is way extended away from the moving averages. At some point, we've got to wait for the reversal signal. TSI is, at some of its higher limits that it's ever been at. If we accelerate over here to the weekly chart and just go looking, as you can see, it is at, kind of all-time highs. And one would think that that momentum, it cannot be continued at the current pace. What about NASDAQ? NASDAQ is doing something similar. Oh, no, we'll go to the Qs, excuse me. Qs, similar type situation. Again, pushing higher, further away from the moving averages. At some point, we will get a pullback. The pullbacks, we had 1, 2, 3, 4, 5, 6 really great pullbacks over the past several months. And we'll just be anticipating another one of those back into either the 8 or the 20. Very, a big extension away from, and so at some point we will get a reversion to the mean. LABU. This is it. It also got a really nice pop up this morning. So if you're following LABU right now, it's we would be looking for a potential pullback into. Doesn't have to get all the way to it, but we had an really nice breakout right here where it broke above this right there. So it broke above this high here. So it's in free space again. Let's take a quick look at the weekly, monthly, weekly. There we go. But if we roll over here to the monthly, throw the monthly in here also, as you can see, it's still got some range to go up to get back up to the total monthly range, about another $100. And so, again, extended away from the moving averages. I'm not going to play it to the downside, but it needs to pull back. Celgene, buy to, okay, Gary. Oh, okay, cool. So it's buying Juno. Excellent. The other one, GDX. And here's one that I will, this is one that's setting up in a kind of an interesting way. GDX is the gold miners. So watch two things. This is kind of an educational section today, and we're going to cut this to a close here very quickly because, yeah, just a couple minutes. Watch up. Okay, up is the dollar index, bullish dollar index. As you can see, it has been going down. It's been going down for quite some time. However, it is kind of at the bottom of the channel it's set up. May slip a little bit more down here to the 23. But when it reverses, you can time the reversal on gold at the same time. So we may drop a little bit more on this. It's got support down here at the 23 level. And so if this continues to go down, gold will continue to go up. And so with that in mind, take a look at JNUG. I think that's correct. Is that correct? Yes. Okay, we got a little bit of cross information here. JNUG on the daily chart, looks like the TSI wants to roll over. Let's see if we got a TSI tick up today. And where do we want to look for that? We want to look right there. And so from where we were yesterday, we were at, okay, 8.15, and today it rolled out at 6. So no, that is, even though it looks like there's a TSI tick up, there is not. We are out of sync with the weeklies because the weekly looks like they want to pull back and roll over. Take one more look at the. There we go. Well, both of those are absolutely true. This is a spinning top doji at a level of support about the $18 level, and we're getting a TSI tick up and positive divergence on the 1 hour daily intraday chart. And so it wouldn't be surprised for it to bounce back up, at least up to 19 or maybe even up to 20. And if it bounced from where it's at right now up to that level, you'd be looking at about a 5% gain up to 19 and a little bit over 10% gain up to the other. up to the $20 level. And if it popped up above the 20, then, it could shoot up here to 24. Very, very, it really could. So let's, or at least 23. So that's the other one. Okay, LABU, we covered that. Okay, as you're aware, we did net Netflix pre-earnings. And as you can see, after hours, Netflix. Now with Netflix, I won't touch this until we get, because it's jumping above. Of course, it's closing above the way above past, resistance. It closed up above that today, but it's gone up and ran up another, $25 from that level. So what I'll be looking at is this dark gray part is part of the after hours section. And so I'll just be watching that tomorrow morning. And I'm interested in what happens to it when it pulls back into this range, about the middle third of that candle there. What's it going to do? Is it going to rebound from there and bounce, or is it going to come on down to the 220, around the 225 level and bounce again from there? Because this is going to put it very much extended away from the moving averages, and we expect a reversion to the mean. But anyway, nice move. We got into this down here at, I think it was like last week on the 18th, I believe, 18th or 19th, or even the 17th, which is over here. We bought the stock, and we also bought an option. And what happened is the option implied volatility expanded, plus the price action moved up, and so we were able to pull sell the option for, we bought it for like $5.70 some odd cent, and we wound up selling it for about $8.50. I think if some people could have gotten more for it than that, but I like to take my profits on the way up rather than waiting for it to top and then drizzle back down. So just keep your eye on that. Here's another one that is also potentially setting up. And this one's going to have to be a little bit more quickly, or more. It's going to be quicker. And that, I'm going to take this off of here, because this may catch a bid tomorrow morning and rally in response. And as you can see, we got a nice little pop up this morning. TSI tick up, another TSI tick up here with a little bit of positive divergence on an hourly chart. And so this is basically kind of popped up. And when you are looking for stock to trade that is, somewhere between 1 to 2 weeks away from earnings, what we can expect from this is that now this has earnings on Thursday this week, the 24th. Correction, that's Wednesday, after hours. And so if it continues to climb up here, that would be good. I will watch this in an hourly chart, though, to see if we get any kind of pullback into the moving averages. If we do, that might give an opening to potentially get in. And where would my target be? Just, it's not going to be some, my target on this would be basically back up into the 142 area here. If it breaks above that, that's great. And so I would probably handle that a lot like I did today, is if it got up to a certain level, or I just went ahead and put a 75-cent trailing stop on it. Could be $1. You choose your own. You're going to get out of it with a profit, but you may not get all the potential profit is available. So again, I would wait for, I like the midsection of that candle, or around the 140 level. If it pulls back into the 140 tomorrow, or just somewhere in this upper half of this big green candle here, pulls back into that area, that may be an opportunity to jump on board. And then right at least up to 142.50, may pop higher than that. Because if we do just an extension, a straight extension from this swing low to this swing high here, and it maintains this symmetry. Activate that, pull this over. If it maintains that symmetry, then we're probably looking at, potentially running all the way up to about the 145, 145.50 level. And so, hey, not too bad. So, okay, I see one person's Near's got. Near, did you have a question about Gary? Did you have a question about Celgene, or just? Let me take a look at the chart real quick. Okay, earnings on Thursday, the 25th, before the market opens. This may be another one of those that would, potentially give you an opportunity to get in. But if you get in on this one, you got to get out by the close on Wednesday. Okay. Oh, I see. Celgene brought Juno, so the index popped. Yeah, it did it very nicely. But this is also a good positive move on Celgene, which may set it up for a nice little pre-earnings run. Because it's got a nice TSI tick up potentially, and see if we can move higher from there. So, okay, guys, I'm going to close off at that point. I want to thank you for joining us today. Give you a couple of trading thoughts to at least consider going into the end of the week. Hey, Deb, before everybody leaves, I will again include a link to my setup, and you can go, if you trade the Thinkorswim platform, you can then download on into your platform, and it should give you all the settings for the charts that I use, the whole 9 yards. So with that, God bless everybody. Aloha.